Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, June 18th. We got a bunch of economic news to go over today, so we'll jump right into it with the weekly jobless claims. So last week we had 279,000. Forecast is supposed to dip slightly to 275, and we dipped a lot further, 267. So obviously good news that it's always good to see fewer people applying for unemployment. We got the consumer price index. This is an important gauge here in terms of inflation on the consumer level. So we had a 0.1% back in April. Forecast is supposed to go up to 0.5, and it went up to 0.4. So not quite as high as expectations, but still much higher. And this is more contributed to the higher price in gasoline in the month of May. Core CPI, this is when you strip out the food and energy. It actually dipped, so we went the opposite direction. So we had 0.3% back in April. The forecast is supposed to dip slightly to 0.2, and it dipped a little bit further at 0.1%. So when you take out food and energy, and that's what the Fed really looks at in terms of our year-over-year appreciation, and also with the rate hikes that's going to be going up, whether they'd like to see it closer to 2%. This is part of the number that they're looking at. We also got the Philly Fed in the month of June. So this is the manufacturing in the Philadelphia region, and as you can see, this jumped up quite a bit. So we had a 6.7. Anything above 0 is expansion, so 6.7. In May, the forecast is supposed to increase a little bit to 9, and it actually jumped way up to 15.2. So good numbers in Philadelphia for the month of June. Leading indicators, another strong one today. This kind of helps us gauge as to where the economy is moving in. Right now, it's showing that the economy is moving in the right direction with the 0.7%, 2 months in a row. 0.7% increase for basically where the economy is moving. So this is good news too. This is showing that the economy is moving in the right direction. So the Fed will be gauging this number as well going forward, seeing where the economy is going. Stock market's up. Dow was actually up over 100 today so far this morning. It was up about 150 a moment ago. Today also there's Europe more interested in the Greek stuff, but there's no sign of a Greek deal yet. But for here in the U.S., it's been kind of placed on the back burner. We've been looking more at our data, going over what the Fed said yesterday. They're still kind of going through the statement, but there's really nothing that came out that was new. Basically, they said that it could be maybe a slightly slower if you look at their dot plot, basically saying that they could have 2 rate hikes by end of the year, and so that's kind of the main thing, which could be considered dovish in a way, because I think initially they thought there would be maybe 3 rate hikes, but 3 or 4. But I think with 2, they feel that maybe it could have shortened it up a little bit or whatnot. But she didn't really commit as to when it's going to happen or anything. So again, there's still a little uncertainty out there. So you're going to see the market probably a little jittery every time the Fed comes around, or if there's comments by Fed members that could spark rate hike concerns. Let's go ahead and take a look at the bond market. We're down slightly, but not enough to make a difference in interest rates. So as you see, we had that jump up. So we had a price improvement after the Fed made their announcement. So bond prices went up, which improved pricing. From where we left off yesterday, we're only down maybe like 3 basis points. So not enough to make any difference in pricing. So we're about the same where we left off yesterday. Now this could change after they're still kind of going through the statement, and sentiment could change. Greece could play a role. Any talks that could hurt with Greece could also play a role in this. So pay attention to the Greek. Next week is they had the $1.6 billion or euro payment to the IMF and the World Bank and everybody, the creditors, and that could if it looks like they're not going to pay it, obviously that's going to spoil the markets. The markets will probably get a little scared, and it's not so much it's Greece itself, but they're concerned about how's this gonna play out with other countries that could do the same thing, that maybe they might default like Greece does. So this could be like a tipping point where other countries could do the same thing. So all right, folks, but rates are about the same where we left off yesterday, as we had a nice little rally yesterday, and we'll kind of see if we can break through and maybe get out of this downward trend we've been going through for the past month and a half. And see if we can break through and maybe get some improvement in pricing. But as of right now, we're still in that channel and haven't come close to the breakout yet. All right, you guys have a wonderful day. Thanks so much for watching, and we'll see you guys tomorrow. Thanks a lot. Bye.